Good morning, everyone. Today is Thursday, June 16th. Thank you so much for joining into our weekly PPACA webinars. Just with a quick show of hands, if you can know if you can see my screen. Yes, you can. Awesome. I'm going to put the hands down now. So we have some items on our agenda that we need to discuss. So we're going to just jump right into it. For those of you that are selling short-term medical policies, there's a new proposed ruling limiting the sale of short-term medical plans. Now this, of course, is not law yet, but what the administration is trying to do is to prevent the younger, healthier folks from taking short-term medical plans for the duration of the year and just paying the tax penalty and keeping them out of the risk pool, the young, healthy ones out of the risk pool. So the proposed rule is that they're going to limit the sale of short-term medical policies to no longer than 3 months, and they would not be renewable. So obviously, you can see how that may affect a lot of you folks doing the individual market during the special election periods as well. So just be mindful of that. Again, we'll keep abreast of any of the changes, but it's been a busy week for things such as this. Last week I talked about the AMS policies being terminated, the AMS/United Healthcare policies, the original grandfathered AMS plans. I did get a copy of the letter. Thank you very much to my agent partners. And the last day of coverage for those plans is not the end of this year. It's actually June 14th of 2017. So your clients have some choices, and you have some choices. You can either rewrite them during the open enrollment period from 11/1 through January 31st, or you can wait until they have termination of June 14th and go in with a qualifying event under a special election period. Just be mindful that if you do wait to contact your clients until their coverage is terminating, it's more likely than not that commissions during the special election period will not return. So, you know, we're all in the money or in the business to make money and earn a living, and so if you're going to rewrite them, you may want to rewrite them during the open enrollment period and hopefully get commission, whatever that might be. Medicare Connections Seminar is September 1st. It's at the Hershey Lodge. They do this every year, the Medicare Options Department, and they bring in carriers to give you a sneak peek of all of their Medicare offerings for 2017. And it's always been a tremendous success for the Medicare Options Department. So watch for those details. I know a lot of you sell not only individual health and group health, but also work in the senior market. So certainly worth your time and effort, so watch for details. Another segment of the business that is under scrutiny is critical illness, and this all goes in line with the administration trying to limit plans that may mimic or offer benefits that are also included in the Affordable Care Act. Again, drawing more people into the marketplace and to Obamacare, quote unquote, rather than buying some of these other policies. So there, you know, this is still new as well. Some of the critical illness vendors, you know, on the group side are requiring that you have health insurance, qualified health insurance, in order to purchase a critical illness policy. And that could be true on the individual side as well. So a lot of the vendors and the carrier partners feel that that's probably how it's going to end up, that you just have to have health insurance in addition to critical illness. But, you know, this is not vetted yet. We'll see what happens. Next bullet point, high mark individual submissions during the special election period. May 29th in my newsletter, we did provide the information that Highmark provided to us, letting us know that all information should be submitted at the time of application submission, such as the proof of the qualifying event, the special election form, application completed in its entirety. What's going to happen is if we submit information and it's not complete, then Highmark's going to pen that application for 10 days and write out to the insured asking for that information. We're pretty much out of that loop. So what we're going to do here at URL is we're going to do what we've always done. We're going to scrub your applications. If they're not complete, we're going to reach out to you and let you know what is needed, but we will not submit the applications to Highmark unless we know they're complete. And we're doing that because if they're sitting there pending, that's not doing anybody any good if we can't get that information to you. So just be mindful of that. If you want the article from Highmark, just let me know. I'm happy to send that to you. It was in, again, my May 29th newsletter. 2017 maximum out-of-pocket. It's going from $68.50 to $71.50 for the individual side, and for a family it's going from $13.7 to $14.3. So again, that's bumping up. That doesn't mean that the carriers have to have plans with those out-of-pocket specifically, but that is the maximum, and a lot of the plans, more specifically the bronze level plans, and many of the plans do go up to that max. So just more money on the consumer, more out-of-pocket, unfortunately. This one gave us a run for our money, and we got this notification actually on Monday, and we've reached out to the carriers on how they're going to handle this. Obviously, they're still kind of going through what they need to do, but the non-discriminatory employer coverage for transgender. I'm just going to read a little bit of this article, and it is in my newsletter. And the new regulations prohibit discrimination on the basis of race, color, national origin, sex, age, or disability under a health program or activity receiving federal funds. As part of this ban on discrimination, blanket exclusions in group health plans for all care relating to gender dysphoria or gender transition will no longer be permitted. Rather, transgender surgery and other transgender health benefits must be provided on a non-discriminatory basis. For example, if a group health plan provides coverage for a hysterectomy for a female participant experiencing medical issues during menopause, then it would also be appropriate to cover a hysterectomy for a participant whose physician recommends it to treat gender dysphoria. So that's where we're at, folks. You know, this is set to go into effect January 1st, 2017 for employer groups. It doesn't affect all employer groups. There are exclusions for certain self-funded groups, et cetera, and other groups. But as this develops, we'll provide more information. Obviously, the way this works is it's not going to be passed on to the employer dollar for dollar, but what will happen is any of these mandated benefits that have to be added to these policies, that translates into premium. Those premium dollars are transferred to the employer in, you know, their fees, their premiums for their individuals, et cetera, and of course passed on to the consumer in the form of, you know, if the employer is paying a portion of the individual premium on the employer plan, then if it increases for the employer, it's also going to increase for the employee. So it's all coming full circle, and I just wanted you to be aware of that. July 26th from 8 to 12 at URL, the Central Pennsylvania Association of Health Underwriters is having their quarterly CE meeting here. There are pretty interesting topics, I think, for all of us in the health markets. And it is 3 CEs. The cost is $40 for a NAHU member and $70 for a non-member. The invitation is in my newsletter. It was in last week as well. So if you have an interest in attending that, they're always filled with a lot of good information. And of course, you meet others, other like agents such as yourself with the same struggles that you may be facing. So it's always good to network as well. So that's it. That brings us up to our open forum. Let's see if we have any questions. As always, while you're formulating your questions, just a housekeeping item, we will have our webinar next Thursday, the 23rd. So hopefully you can join us. It says she missed the first bullet point about short-term medical. Quick recap. Kelly, the administration has proposed a rule limiting short-term policies that mimic some of the Obamacare coverages to be in place no longer than 3 months and also be non-renewable. So that's the proposal on the floor to limit those plans. Obviously, it affects us all. And that's it. Those are all the questions today. And as always, I really appreciate you joining in and look forward to any questions that you have. You don't have to wait till Thursdays to ask them. I'm here all the time. Just shoot me an email or give me a call. As always, we thank you for your business and thank you for joining in. And I hope you have a great day and balance of the week and also a wonderful weekend. Bye-bye.